Hello, everyone. Let me introduce ourselves from Group 1. We are here to explain the understanding of the basics of accounting. Next, we will introduce members of our group.
Everyone, my name is Dwi Nur Rokhmah with study number 23091220037.
Hello, my name is Faris Agil with student ID 23091222160, and I come from Yogyakarta State University.
Hello, my name is Intan Samudro Rizky with student number 23091220111.
Accounting is very difficult. If we don't know what accounting is, then we will most likely say that. Too many numbers make some people think that accounting is difficult. Therefore, let's understand the basics of accounting first. Let's get started. What is accounting? Accounting is an information system that collects, records, and reports the financial transactions of a business entity or organization. And who needs accounting data? Accounting information is needed by employees, owners, creditors, banks and other lenders, regulatory bodies, and tax authorities, among others, so that they can utilize the accounting information.
Many types in accounting, but for this time we will only introduce one type, which is financial accounting. Then, what is financial accounting is? Financial accounting is a process by which companies to record and report their income, expense, and receivable for a specific period.
Here I will explain what accrual basis and cash basis are. In the accrual basis, here we recognize transactions when they occur, regardless of whether cash or payment has been received. Well, for the cash basis here, we will recognize transactions when cash or payments have actually been received. The cash basis itself is more recommended for small businesses which have not yet implemented the credit sales process. And on the other hand, the accrual basis is suitable for businesses that have complex transactions, many customers and suppliers, and operations that involve income and expenses in different time periods.
Knowing accounting is incomplete if you don't know what is financial statement are. There are three types of report that we will discuss, namely the income statement, balance sheet, and the cash flow statement. The income statement is a report that contains the company income and expense and information on the profit or loss of a company. Balance sheet is a financial statement that reports a company asset, liability, and shareholder equity. In short, a balance sheet is a financial statement that provides an overview of what a company has and owns, as well as the amount invested by shareholders. The cash flow statement is a financial statement that provides data on our cash inflow received by the company for ongoing operation activity and external investment source.
The accounting equation is a fundamental concept in accounting that represents the relationship between a company's assets, liabilities, and equity. It states that assets equal sign liabilities plus equity. This equation means that the total assets of a company are equal to the sum of its liabilities and equity. Liabilities are debts that a company owes to others, such as creditors. Equity is the ownership interest in a company, and it is represented by the claims of shareholders. The accounting equation is
Two main ways to record transactions in accounting. First is journal entry and then the journal ledger. Journal entry are chronological records of transactions that provide a detailed description of the transaction and the account that are affected. General ledger is a master record of all the account in a company accounting system. It is used to track the balance of each account over time.
Is always in balance, which means that the total assets of a company will always be equal to the sum of its liabilities and equity. This is because every transaction that a company makes will affect two or more accounts in the accounting system, and the total debits will always equal the total credits. A trial balance is a list of all the accounts in a company's general ledger, along with their balances. It is prepared at the end of an accounting period to ensure that the accounting equation is in balance.
Adjusting entries are made to the accounting record at the end of an accounting period to ensure that the financial statements are accurate. They are used to recognize accrual and deferral. Accrual are expenses that have been incurred but not yet paid, and revenue that have been earned but not yet received. Deferrals are expenses that have been paid but not yet incurred, and revenue that have been received but not yet earned.
Closing entries are entries that are made at the end of an accounting period to close the temporary accounts in the general ledger and transfer their balance to the permanent account. Temporary accounts are accounts that are used to track income and expenses, and their balances are reset to zero at the end of each accounting period. Permanent accounts are accounts that are used to track assets, liabilities, and equity, and their balances are carried forward from the one accounting period to the next.
Financial analysis is the process of evaluating a company's financial performance and position. It is used by investors, creditors, and other stakeholders to make informed decisions about a company. Two main types of financial analysis. First is ratio analysis and then financial statement interpretation. Ratio analysis involves calculating and interpreting ratios that measure a company's profitability, liquidity, and solvency. Financial statement interpretation involves analyzing the trends and relationship between the different financial statements.
Ethics is important in accounting because accountants have a responsibility to provide accurate and unbiased information to their stakeholders. They must also avoid conflict of interest and maintain confidentiality. There are a number of ethical codes of conduct for accountants, such as the AICPA Code of Professional Conduct. Accounting software is a type of computer software that is used to automate accounting tasks. It can help business improve their efficiency and accuracy. There are a number of different accounting software programs available, and the best programs for a particular business will depend on these specific needs. Accounting is a complex but crucial file that provides information about the financial performance and position of business. It is based on a number of fundamental concepts such as the accounting equation, double entry, bookkeeping, and financial analysis. Accounting software can help business automate accounting tasks and improve their efficiency and accuracy.
Thank you for your attention. I apologize if there are any mistakes in our words. That's all from our group. Wassalamu alaikum. Wa rahmatullahi wa barakatuh.